We failed the Santa Claus Rally. If we close lower today and take out the low from the first trading day of January, that is going to basically trigger that second aspect of the January Barometer. But here's what you need to know before the bell this morning. So first of all, today is the 5th trading day of January. Now, why is that important? So goes the first 5 days of the year, so goes the month, so goes the month, so goes the year. We are in the middle of the January Barometer. So today, if the market closes higher, we will have successfully created a positive first 5 days of the year. Just barely, just barely. This morning, futures are pointing slightly lower. So again, we are right on the cusp of failing the first 5 days of the year. So we failed the Santa Claus Rally. We are threatening, if we close lower today, which is kind of what we're threatening here early in the morning, the Dow's down about 18 points right now, so that could turn around really quick. But again, markets are looking to open lower this morning. So if we close lower today and take out the low from the first trading day of January, that is going to basically trigger that second aspect of the January Barometer. So if January ends negatively, so if the first 5 days are negative, the month tends to be negative. If the month is negative, that portends to a negative year, using averages, looking back over history. Now, 2024, we had a negative first 5 days and a negative January and had a whopper year. So again, it doesn't always mean a bad outlook, but it certainly has been a rough start so far to the markets. And again, this is, kind of where we are. So yesterday I talked about yesterday morning that we had gotten above the 50-day moving average. We were challenging the 20-day moving average. If we could get above that, then we had a clear path for the markets to move higher. That didn't happen. We opened higher right at the 20-day moving average and failed miserably yesterday. And yesterday's action really did not resonate with what was going on really kind of in the JOLTS survey. There was something else going on yesterday because everything got sold off yesterday. Stocks sold off hard, bonds sold off hard. It was really kind of a day of no safe asset really across the board. And we saw everything getting sold. And this looked a whole lot more like major institutional selling, hedge funds, shorting markets, etc. But there was something else going on really in the markets yesterday. Is it a one-day anomaly? Don't know. But there was something happening yesterday that was really not just a reaction to the JOLTS report. Because again, just a very quick look at the JOLTS report told you that it wasn't that important. Yes, the ISM services survey showed an uptick in prices. It was a minor uptick in prices. It wasn't a major inflationary push in prices. And again, that's a survey. And a lot of the survey managers right now have already talked about they're worried about tariffs. So again, a lot of buying, trying to get inventory in before tariffs start. Well, if there's a lot of demand to front run tariffs, you're going to push prices up. And so if that's where that uptick in prices came from, it's temporary. So again, this data doesn't really pretend to the size and the magnitude of the entire market liquidation yesterday. So again, a very, very strong liquidation day yesterday. Importantly, we're sitting right here at the bottom of this consolidating trend. So again, the market needs to turn around. We are very close. If we take out this low, that's going to violate that first 5 days of January. So we are right at the bottom of that trend. The market needs to find support here and turn back up if we're going to keep that first 5 days of January positive. Again, that kind of gives the market a little bit of bias for the month. We'll see what happens today. We'll report back to you tomorrow on that and kind of what to do next. But that's what you need to know before the bell this morning.